A nonprofit coded a designated donation to a regular cost account and didn't track anything with it last year. They now have more costs associated with what that designation donation is for. Should I code to that original cost account for tracking and an audit trail? So I'm going to explain to everybody a little bit where Andrea is coming from. So she's doing some bookkeeping work for a nonprofit client, and by the word code, what she means is to classify a transaction so it shows up in a particular line item in the financial statements. So if it's a designated donation, so I want to get clear on a couple of things. If they classified a donation to a cost account, I want to get clear on that, because normally with nonprofits, donations are income. So I would expect income to be classified as an income account, unless you're saying that a nonprofit made a donation to another organization and designated that donation. So if you can clarify for that for me, I'm going to assume that for a moment. So if they made a donation and they didn't track anything with it other than the fact that the outbound payment for them to make a donation was classified as an expense. Hey, Vanessa. They have more costs associated with that outbound donation. Should I, in other words, what I'm hearing you ask is, should I be consistent? So this is my answer to you. If the nature of the costs are the same, then use the same expense account. But if it's if it's the same initiative, but the nature of the expenses is different, for example, if there's a sponsorship expense, but then there are expenses related to the same initiative, but expenses for materials and supplies, then one goes in as sponsorship expense or promotional expense, and one cost gets classified as materials and supplies. And how you want to track that these two things are related is not in their general ledger account, but in some other feature of the accounting system, like class tracking or tracking categories or items, depending on what accounting system you're working with. So Andrea has a follow-up. It was not coded to income. They received a grant and coded to the security account. If the organization received a grant, that needs to be classified as income. And if it was done wrong last year, do not carry the torch of whoever did it wrong last year. Definitely step in and say, when income is received, it needs to be recorded in the financial statements as income. And there may be expenses associated with that grant, and those get classified as expenses. And the thing that you use in an accounting system to be able to run a report and say, how well are we stewarding this grant financially, is by class tracking, which is what it's called in QuickBooks, tracking categories, which is what it's called in Xero. If you need to use items, that's fine, it can make things more complicated. But that's my recommendation for that. You can also use, if you're using QuickBooks, particularly QuickBooks Desktop, but if you're in QuickBooks, you can use the job costing feature, which is a favorite of a lot of nonprofit accountants, to enter every grant as a customer and every grant award as a job, and do job costing. So you can run a profit and loss, aka income statement, and filter it just for that grant. You can say, here's our income, here are our expenses. Are we overspending the grant? Uh-oh. Are we under-stewarding the grant? Uh-oh, right? And this is where bookkeeping creates such a tremendous value, among other things. Because if they're overspending a grant, first of all, they wouldn't be the first nonprofit in history to do so, because a lot of organizations don't use this great technique, which is essentially job costing. I mean, who does that? Construction industry, they do it in construction. It's useful to do it for grant-heavy nonprofits as well. And if they're overspending, by tracking, they can see, oh my gosh, we're we're 50% of the way through the grant, but we're 75% of the way through expenses. Hold off. Unless you've done some extra fundraising to cover the overages, right? But if you haven't, the organization can get into a real cash crunch for continuously overspending grants. You can end up having to take out a bank loan and incur interest for that. It may or may not look good to donors. That may or may not look good to the board, right? But if you understeward a grant for fear of overspending, well, what are we all here for, right? You won the grant, spend it, make a difference in the world. So this is a very powerful use of bookkeeping that you've highlighted, Andrea, and I'm really glad that you brought forth this question. Thank you.